Good afternoon, traders. My name is Daud, and welcome to another video blog by Elliott Wave Forecast.com. Today is 25th of March 2019, and the time right now is 12:10 p.m. Eastern Time and 4:10 p.m. GMT. In today's video, we're going to take a look at the 10-year note futures, which obviously we know that they have been rallying for the last few weeks. Throughout this entire month of March, we have seen them trading higher, but recently we saw them breaking above this peak that they formed back in January, and then there was a secondary low here on the 18th of January. So break above this level here, the peak that we saw at the beginning of January has created an incomplete bullish sequence in the 10-year note futures from this low that we saw back in October of 2018. So this move does look like a five-wave move, even though this wave 4 is a bit too short in time as compared to this wave 2. But if we take a look here at the RSI, so we do still have divergence here, especially in the shorter cycles. Okay, within this cycle here. So if this is a five-wave move, like I said, this is a bit questionable. So I will explain what the other scenario can be. But the key is that we have broken above this peak of January 2019, which has created an incomplete sequence against this low of January 18. And then this is the target here, this upper blue box. This obviously, if this is an ABC, this area doesn't really matter too much, but I will explain why it can matter. We'll talk about it in a few moments. But this is eventually the target unless it obviously truncates and fails to reach there. So that's the area that we believe we will be looking at, and we will also talk about the impact that it can have on the yen pairs and the indices. All right. So this is obviously the blue box that you're seeing on the chart is nothing more than it's related to the A and B in black. Okay, so that gives us the measured move target there. And if this is like an ABC, then this is our 1, 2. We should be within the wave 3. And then we're looking for a pullback in the blue wave 4 before another leg to the upside. Now, what is going to be the other scenario? Like I said, that this move here, it can be counted as three waves, as well as we did not get a very big pullback here in wave 4. If we count this as a three-wave move, like I told you guys already, that it's irrelevant about the wave count. Obviously, the pullback that we get from this blue box, that can determine whether it is going to continue higher as an ABC, or if it's going to turn into an ABC or a WXY within the rally from January 18 low. All right. But the key is that we broke this peak. That means that eventually we should be looking for this upper blue box area between 126.27 to 128.07 in extension 130.14 to finish the cycle from this October 2018 peak. Right. So the other scenario is that this was an ABC zigzag here, 1, 2, 3, 4, 5, and then we are finishing wave A in the blue box, looking for a pullback in the B. The pullback can be larger than expected, bigger than this wave 4 in blue, so that it turns into a B wave before we make the next rally towards this area. And of course, as if you take a look here, we have already gone past the 161 extension here, so we do believe that this move can become a should become 5-wave move, whether that's going to end up as wave 3 of C or it's going to end A of Y. Obviously, that remains to be seen. Now the other scenario is that obviously we're showing it as an ABC from here. Obviously, if we do continue higher as five waves from this low, and we manage to break above this peak of 130.14, then this will become 1, 2, and then this C will become 3 if we break above this level here, because obviously we do not label wave C going above the 1.618 extension unless it is in a flat structure, which this one is not. So it can break above that level would mean that this becomes 1, this becomes 2, B becomes 2, and then this should be the wave 3 obviously. But for now we will be looking at this area initially. All right. Now what impact can it have on the indices and the yen pair? So for that we prepared another chart for you guys. If we take a look here, basically this chart, so this is basically a line chart, and you have here the bars here. These are the 10-year note futures, and the blue line is the dollar yen, which is currently trading around 110.11 area here, and then this is the S&P 500 in red. Okay, now you can see that the 10-year notes, it trades inverse to the dollar yen and the S&P. Okay, and for example, we can see here that this low, this was a November low. You can see that the 10-year note started rallying, and then S&P was trading sideways to lower, and then the dollar yen was doing the same. This is the January peak. You can see that dollar yen formed a low here, and the 10-year notes formed a peak here, temporary peak at the beginning of January. This one that I was referring to earlier on, this peak here. It is this peak, and that was a low in the dollar yen. And then obviously we saw S&P forming a low at the end of December, but then it bounced here. All right, that's where the 10-year notes it pulled back, and then it peaked here, and that was the secondary low in the S&P. So this one traded lower at dollar yen and the S&P rallied, then this one went sideways. Okay, but in second dimension, the dollar yen and the S&P continued the rally, and now we can see that again we have seen this. If you take a look at this date here, beginning of March, 4th of March here, that was the peak in the dollar yen. It has dropped, and the 10-year note it continues to rally, and the S&P obviously did make another high in second dimension. If you guys see here, this rally, this was this pullback here in the 10-year notes, it went sideways. And now, looking at the sequence from this October 2018 low, we know that the 10-year notes has a target now in this blue box area, which means that at this stage, obviously, it's not the right time to be chasing strength in the indices and yen pairs, and that this continued rally here towards 126.27, 128.07 area means that the dollar yen and the S&P and the indices in general, they should now remain sideways to lower. We should be getting a pullback or a decline in the indices and the dollar yen, okay, which obviously will have an impact on the rest of the yen pairs as well. And you guys can, see the full detailed analysis for S&P, the other world indices, the other US indices, the dollar yen, how we are labeling this, the wave count, and the other yen pairs. Of course, you can view that all in members area. If you're not already a member, you can certainly sign up for a free 14-day trial. All right, all you need to do is go to our website, which is www.elliottwave-forecast.com, and then sign up for a free 14-day trial here by clicking on this button. All right, now, so the key is that until the 10-year note futures, they do not reach this blue box area, we believe that the indices, I mean, yes, in second dimension, remember, you can even still, just like we've seen before, that the highs and lows are not going to be exactly the same. So even, for example, S&P can still make a new high, okay, and then pull back. But the key is that any new highs should be limited and should be contained, because we know that the 10-year note futures here is calling for extension here. Obviously, if it follows this scenario, then in this bigger pullback, then that could still favor extension here in the S&P, and then 10-year notes will extend towards this area, and that could produce a pullback in the S&P. But the overall idea is very clear, that until the 10-year notes do not reach this area, we believe the indices and the yen pair, they should now start rolling over. Of course, depending on their individual structures, for that, like I said, you guys can see the full details in the members area. As far as the wave count for the indices and the yen pairs are concerned, okay, because some of them, they can still make a new high, they can play second dimension. So that does happen a lot. It's a concept that we use at ElliottWave-forecast.com, and members, we keep educating them about this concept, and we do believe that you guys can also benefit from it if you're not already a member. Okay, so be prepared for it. The 10-year note futures are telling us that we should not be bullish at the indices and the yen pairs at this stage, even when some of them, they can still make another high before the rollover and do a 3-wave pullback at least. All right, so I hope you guys enjoyed the video. Thank you for watching. Take care, enjoy the rest of your day, and have a great week of trading. Thank you all, and we'll be back with another video blog soon. Thank you.